bulls hold ground in a quiet trading day. U.S. stock market snapshot, November 29th, 2023. Stocks were muted again today as the major averages were unable to make a move in either direction. The S&P 500 was off 0.09% to 4,050.58. The NASDAQ lost 0.16% to end the session at 14,058.49, and the Dow Jones was up 1344 points, or 0.04%, to close at 35,130.42. The Russell 2000 was the outperformer, up 0.61%. That is a good sign on a flat day. We had low volume again, but that is going to pick up tomorrow with the PCE data. We had 611 sectors in the green, with real estate leading the way. Basically, another muted day of sideways trading. Still, what the bulls want to see, as it demonstrates that there is no desire by institutional investors to sell the recent rally. Because of November's comeback, the major market benchmarks are approaching their 2023 highs reached over the summer. To reach a new closing high for 2023, the Dow would need to gain about 0.5%. The S&P 500 is about 0.8% from a closing high for the year, while the NASDAQ is roughly 0.7% away. Driving this move has been the decline in interest rates, and today that continued. The yield on the 10-year Treasury note fell below 4.3% for the first time since September. The market right now thinks that the long-term trend in inflation is coming down, that the Fed is acknowledging that, and there's more room for participation in the rally in stocks and bonds. Traders have now become optimistic that the Fed's rate hiking cycle is over, with Fed funds futures pricing reflecting a chance the central bank could cut rates as early as next spring. Those soft landing hopes were greatly strengthened after the Bureau of Economic Analysis, before the opening bell, released its second estimate of U.S. Q3 GDP growth, which was revised higher to 5.2% on an annualized basis from a prior reading of 4.9%. Tomorrow, the release of the Personal Income and Spending Report for October will be potentially what creates the next leg up. Inside the data, the Core Personal Consumption Expenditures Index is expected to dip to 3.5% from 3.7%. Core PCE is the Federal Reserve's preferred inflation gauge. Even though the major averages remain on track for strong monthly gains, we still want to see IWM move with conviction above its 200-day line tomorrow. Turning to Wednesday's active movers, NetApp ended as the top S&P 500 percentage gainer after Wall Street praised the data infrastructure firm's rising gross margins. General Motors also ended among the top S&P percentage gainers after the carmaker reinstated its earnings guidance, while also unveiling a 10BI share buyback program and plans to increase its common stock dividend by 33%. Thanks for watching.